Hello, everybody. Good morning. Good morning. Oh, I guess it's afternoon now. Here we are, Wednesday Wins. I'm Diana Lidstone, the founder of the CEO Freedom Academy, and I have a very special guest today, Katrien of Second Banana. And just, to be upfront with everybody, she is one of my clients, but we're going to talk about measure what matters. So take it away, and I'd just like you to introduce yourself for a little bit. Why
Yeah,
why do you call your business Second Banana is a good start. There we are.
great question. So thank you, Diana, for this opportunity. I called my business Second Banana because being a second banana is an expression, and it means being an assistant to someone. So you usually have the first banana, the business owner who's on stage doing their show, doing whatever they're great at. But in order to be able to do that, sometimes they need somebody in the back, and that person is called a second banana, and they handle everything back office wise. I don't do everything, but I focus on bookkeeping, finance, accounting. And yeah, I came across that expression, and it really it says what I really want to do for my clients, being their second banana. So
I love it. I love it. I think it's great because, every business needs they need to measure what matters. And that's what we're going to talk about today. And we need our books in great shape. We need them accurate. We need them on time so that we can make better decisions. And I think that's, having a great bookkeeper as your second banana is a great way for entrepreneurs to make better decisions. Our bookkeepers can empower us to make better decisions, hiring decisions, whatever it happens to be. So we're going to talk about some ways that, you as entrepreneurs, so I'm guessing those of you who will be listening, what are the things that where money can leak out of a business. So let's think of our business as a bucket of water, but there are holes in that bucket. And so Katrien and I are going to talk about some of the things that can cause leaks out of your bucket, money leaks, really. And sometimes we aren't aware of them unless we have a really good bookkeeper and we need to measure these different things. So one of the things Katrien and I talked about before we came live was something about credit cards.
Yes.
So yeah, go ahead, Katrien.
Yeah, it's a classic one, I feel. When I take over a client's file, for instance, I see a lot of them with high credit card interest fees. Sometimes it's all under the account of bank charges, and everybody thinks that's the cost of doing business. But there are actual things that you can do about that, especially if it's an interest fee or a late payment fee. These, even if you don't have the cash on hand to pay off your credit card fee immediately, still there are options to lower your interest fees. I had a client the other day, and they had I think on average $130 a month on interest fees that they were paying. They were not really aware. They knew it was a bit to the higher side, but they didn't exactly know the amount. And then I showed it to them, and I said, if we're not doing anything, you're going to spend $1,500, even more.
That's a big leak. That's a big leak in your bucket.
Very big leak. Yeah. And there are many options, even the line of credit to pay it off. A line of credit usually has lower interest fees or paying off a bit more amount. There are multiple options, and I can walk them through them. But that's usually a big one. And of course, because it goes off your credit card automatically, you're not always aware of it if you're not following it up on a monthly basis. So
yeah.
That's a classic one, I think.
A classic. Another one we talked about was marketing expenses. And this is dear to my heart because, I often will ask my clients, what are you doing for marketing? And is it giving you an ROI, a return on investment? So how can that be a leak in a money bucket, so to speak?
Well, first of all, if they're not following up on what the return is. So I usually work with coaches, consultants, therapists, psychologists. So they're very into their business with people.
Yes.
And they make decisions from a gut feeling sometimes in their business, but because they have to do it as a job. And so marketing expense, it's very easy to overspend in that account and to just, oh, there's an event from a famous speaker in Montreal. Everybody's going there. I think I should be going there too. And of course, it can be a great opportunity if you can get clients or other relationships out of it. But then if we measure all that, it's not only the event, it's going there, it's the accommodation there. Of course, you're going to eat something there. So it adds up very quickly. And if I show them then that number, that's like, oh, I didn't know that it was that much. And then, of course, if you're not following up on, did I get clients out of it? Or did it, you can always do something out of a personal interest, of course, as well.
Yeah.
But yeah, if you're running into some cash flow issues in your business, it might be interesting to follow up on, was that trip really worth it? And also, if you're doing marketing without a strategy, if you're just, I'm going to shoot in every way I can and see what works. But if you're not following up on what works, then that can be a very easy money leak too, I feel.
Yeah, I see. So we're talking about money leaks here with bookkeeper Katrien from Second Banana. And, going to networking. I see people, very often, especially if you're in the city. So Katrien and I don't live in a big city, but in a big city, it's easy to go, oh, this networking event, that networking event, and you're paying, $25 or $30, or if you have a drink, maybe it's up to $50, and you go, that's a lot of money that you're leaking out if you're not in the right room with the right people. And so I really encourage people to, where is the ROI? What is the ROI on those expenses? Okay, we also talked about income, different types of income, and it really can be a leak in the sense that you're not being profitable. And again, here is an ROI, and I'll give an example. Very often people think that, oh, I'm going to write a book. This is one of my favorite, I hate to say it, pet peeves. It's not that writing a book is a bad thing, but you must be aware of what the ROI is going to be. So you hire a writing coach, a publicist, you're looking at probably, I'm guessing, tens of thousands of dollars. Is that going to bring you the type of return on investment that you expect? I know from experience, writing a book, the book itself is probably not going to be a great income source. But let's talk to the bookkeeper about different types of accounts for different types of income.
Yeah, so for the CRA, basically, it doesn't really matter. Income is income. If you put it all under one category, they're happy. Usually the accountant is happy too. Everybody's happy. But especially with coaches, like you mentioned yourself, they have different income streams. They do workshops with a lot of people. They do one-on-one sessions. They have sometimes that they go speaking somewhere or they write a book.
Yeah.
And then it might be very helpful if you just split up these accounts and these income streams in your bookkeeping, so you can actually track how much you have earned within a certain income stream. Even if you don't go much further than that, still putting it down on a paper and showing somebody, like, did you know this is what you gained with each of your income streams? That already triggered like a huge discussion, like, oh, I thought I was earning more with that. I'm like, oh my God, I'm spending so much time on that, and that's the only thing I get out of it. And that's basically what you need as a bookkeeper, I think, in the relationship with your client, that something sparks a conversation and they can make decisions from there on.
Yeah, and I think that there is a context, or there is a perception that bookkeepers are just there to do data entry. But if you're a smart coach or consultant or whatever, you're going to, I feel that person who does the data entry also can help you translate those numbers into helping you make better decisions.
Yeah, definitely. And it's not only about profit either sometimes, because of course you started a business to be profitable and to make
Yeah.
a living out of it. But it's also about being comfortable in your business and having that sense of control, like, okay, I'm gonna be able to pay this big expense that's coming up. I'm gonna be able to pay my taxes.
Yeah.
I'm gonna be able to pay myself out. It's this sense of, comfort.
Yeah.
Yes. That it brings to business owners, if okay, even if they're not good at it and they have a bookkeeper or even accountant that is doing their books, somebody is taking care of this, and somebody will flag or will tap my shoulder if I need to do something, if I need to know something. And I
Yeah.
think that's the added value of a bookkeeper. Yeah.
Yeah, for sure. For sure. Okay, let's talk about cash flow. Cash flow is something that I know that so many, like you say, coaches, consultants, other experts, they are not always cognizant of their cash flow. And you and I talked about, having accounts receivable. God forbid that you should have accounts receivable, but it does happen, doesn't it?
Yeah, definitely. And that's a classic too, but I think of all the businesses that fail, I think 80% of them fail because of cash flow issues.
You're correct. Correct.
So not a cash, you're getting enough revenue, but the cash isn't following. So it's mainly a timing issue more than a cash issue.
Yeah.
So accounts receivable, completely fine, but you have payment terms. So the amount of days, months even, that you let your clients, give your clients to pay you. If that's 30 days, 60 days, sometimes you have to wait 30 or 60 days for your money to arrive. But of course, your suppliers have payment terms towards you, and then you have to pay them on receipt within 5 days. Your credit card needs to be paid off at the end of the month. But if you don't have the cash, because you give your clients a lot of freedom to pay whenever they like, then you can run into problems with your cash flow. And it's about making business owners aware that is actually something you can do something about. You can change your payment terms.
Yes,
And
it's
go
your
after that
business.
money. Yeah,
It's your
you've
business.
earned
You
the money,
make
right?
Yeah, exactly. I mean, I don't work with somebody until, let's say, payment is due at the beginning of the month. So really they're prepaying for the
Mhm.
work. It's the same bookkeepers, if you're doing a big cleanup job,
Mhm.
it's going to take, I don't know, I'm going to guess, 15 hours of cleanup. You could bill them for half of that
Mhm.
in the beginning so that they actually pay that up front. And then when let's say you bill them for 7 hours. Okay, we're coming close to our 7 hours. We're going to bill you again for, we think there's another 7 hours. You can change how you as you said, how you bill people, and this could really have a huge impact on your cash flow. So
Yeah.
cash flow is a big thing.
Yeah. And also, for instance, if you work with different types of clients, like if you work with the government, it might not be easy to get your
No.
money within 5 days.
Yeah.
But if and it's just something you need to be aware of. If you choose your market, or if you are willing to take on another client, that might be just a parameter in your decision of like, I have to think about cash flow too.
Yeah. Yeah. So there's a couple of other things that we talked about, and one was software subscriptions and how these can be easily a leaky bucket item, because if we're not paying attention to them, and if we're not paying attention to, like a what I'll call a tech stack, so all the things for tech, that you might have. Certainly, I see sometimes, sometimes people have multiple, and I'm sure you see this, they have multiple tech offerings that they pay for. And then if they're not reviewing this on a consistent basis, what happens?
they're either paying too much or, well, they're basically paying too much. So I always, if I see that their tech stack account is to the higher end side, I always propose them to just make a list. Just take your credit card statement, because it usually goes off of your credit card statement from last month. Just go over it and just list it out. Again, if you see it on paper, it's already a big eye opener sometimes.
Yeah.
And if you then mark in the second column, what do you pay for it? How often do you pay? And how often do you use it?
How often do you use it? There we are. Again, it's what is the ROI? Like, I use my StreamYard account at least once a week. So I know that, the fee that I'm paying for it, or the Zoom. But, if I went to a big complicated, I'll say CRM, I'll say like Go High Level or something like that, I probably wouldn't use all the features, and the fee is quite high. So one of the things that I recommend to my clients when we're doing our planning is, just take a quick review of your tech stack every, 90 days or whatever. And are you getting the best ROI for your business?
Yeah, definitely. And sometimes there's an overlap as well. Like, for instance, the Microsoft stack has a lot of tools already integrated in it, and you're not aware of it. Or sometimes you tried something out and the trial became a paid subscription and you're not really aware of it. Or I had a client the other day and she was using the premium account, I think it's called, from Canva, because she was creating a lead magnet. And then the lead magnet was done. It was went live. And so she wasn't really using Canva anymore, but the subscription kept on running. And so you can either go back to a free tier, or you can even pause it for a few months. And that's valid for a lot of the subscription, actually. If you don't use it, then don't pay for it. You can use your money otherwise.
Yeah, exactly. Another big one is training. And I see a lot of, I would say I see this a lot in I'll say the wellness field, but also in coaches and consultants where, they just one accreditation after another. And they think that being more certified is going to help them, I don't know, get more clients. I mean, but truthfully, it's not. So what are the challenges that you see in your clients as a bookkeeper for accreditations and things?
It's a bit like you mentioned as well. And it's a bit tricky sometimes to measure the return on investment, because you're not sure, did this client find me because I have another set of letters behind my name, or, and of course, training is valid and you learn something from it. And so I will never question that, but I can understand it's a bit more of a tricky one. But sometimes, especially with coaches, I think it's just their field. They are helping other people with their professional or personal development plan. And so it's very natural to them to just do it for themselves as well. And so, it's just something that they do out of a habit. Like, I want to know more. I want to become better. So I kind of understand it, this one.
Yeah. But I think the thing is, they have to, again, think about the ROI. What is the ROI on it? And, I've seen many people with multiple letters after their name, and they use the letters in their LinkedIn profile, etc. But the truth of the matter is, their clients, their prospects have no idea what those letters mean. None. So, you have to be cognizant of training. The two more things that we're going to talk about here briefly, and they're kind of related. And these are home office use, number one. So I had this experience because many of you who are watching might understand that I moved from a smaller house to a larger farmhouse in the last couple of years. And I was discussing this with my husband, who happens to be my bookkeeper. And he says, in the smaller house, my dedicated space for my home office was a larger percentage of the square footage. we moved to the farmhouse, my office is the same size, but it is a smaller percentage of this bigger house. And so what I can claim for home office usage is very different. And you probably run into some things like that as well.
Yeah, especially because most of my clients are service-based businesses, so they work from home. They don't have a brick and mortar shop.
Yeah.
But yeah, and people get very creative in what they can count as business use of home. But yeah, it's about still, not lying too much.
Not being too creative for CRA.
Yeah.
Yeah,
But of course,
it's supposed to be a dedicated space. Am I
yeah,
correct? Yeah. It's
yeah,
not,
dedicated.
yeah,
Yeah,
it's not meant to be the corner of your dining room table. That is not, yeah.
no, a dedicated space which you only use for the business.
Yeah.
Yeah, then you can claim that part. Yeah, and the expenses, the percentage is valid for all the electricity, the internet expenses you make. You can claim the percentage of that as well, of course. Yeah.
Yeah. Yeah. And the last one we're going to talk about is mileage, car expenses. And I think this is, it's not, I think, I know, this is often something that either people don't track and don't think about. For instance, if I'm driving my car to a networking event, we have a mileage log, old-fashioned book in my car, and I write down the mileage before, after, and what the event was. Okay,
Great.
so I went to Perth, so I have that specific mileage.
Yes.
But those are tracking mileage. There are many ways of doing it, right, today?
Yeah, you have apps about who do the same thing too. Yeah, right.
Yeah.
And I know it's a little bit more administration to do, but it's nice that at the end of the year you can claim a percentage of your car expenses back, and that's always interesting. You can get a little bit of money out of it. So yeah, it's giving them a tool. I have a certain tool that I let my clients use, so they can track in a spreadsheet where they go to, what the event or the reason was, and what the mileage was. That helps, but it's still a little bit of administration to do. So I know it's a bit of a hurdle.
Yeah, but if this is about putting sort of that leaky bucket. It's money that you can get back, kind of thing.
Yeah, you leave it on the table otherwise. Yeah,
you're leaving it on the table. Correct.
Yeah, definitely.
Yeah, so we talked about 8 different ways excuse me, that entrepreneurs could be either leaking money out of their business bucket, or leaving money on the table. And thanks so much for joining me today, Katrien from Second Banana. If you have any comments, any questions, we'd love for you to just leave them, in the comments below. And, I'll put Katrien's contact information, and you can reach out to her if you need a really good bookkeeper who is you want to build a relationship with. Because I know from working with her that she wants to be your, kind of like your numbers translator, so that she can help you build your business in a better way. So thanks for joining me today.
Thanks for having me. It was fun.
Yeah.
Thanks.
Great. All right, everybody. See you next Wednesday. And this is Diana Lidstone from CEO Freedom Academy, signing off for today. And we'll see you soon. Bye for now.
Bye.